Hello, hello, hello. Happy Friday, July 5th, non-farm payrolls for revisions lower day. Good morning, John. Hope everyone had a wonderful day off. If you got the day off yesterday, if not, hope you still had a wonderful day. We're back for the final day of the week. Good morning, Ro. Thanks for putting in everything sterling with all the non-farm payroll data. Good morning, Patrick. There you go. Good morning, Sterling. What else do we have here? Who else is in here? Good morning, Daniel. Good morning, Royal Palms. Good morning, everybody in the background. Sorry, Twitter feed for some reason is not working. But people on YouTube can watch. Don't know what's going on. Have to figure that out later. All right. Again, Sterling putting in all the information. The April and May reports were revised a total of 111,000 lower. Continues the streak of lower revisions. I think it's either 10 or 11 out of the last 15 months have been revised lower. So we already had Williams speaking, saying the economy is in a good place. We're going back to 2%, blah, 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 blah. Non-farm payroll. Forecast 160, consensus 190, actual 206. So that coming in stronger, but it'll be revised lower next month. Unemployment rate ticking up to 4.1%, breaking the critical level of 4 for the Fed. Does that mean the September cut gets stronger, or potential September cut? Hourly earnings coming in at 0.3 month over month, ranging between 0.2 and 0.3. Hourly earnings year over year coming in at 3.9. Participation rate ticking down a little. 62.6. Weekly hours holding steady. Look at government payrolls. Yay for the government saving us all. Manufacturing dropping, and government forecast 30K coming in at 70K. Yay for the government fixing everything for us. So, I mean, this is just insane. All right, non-farm pay, the private sector, 136K. U6 rate 7.4. What else do we have today? We have the rig counts, Fed balance sheet after the market closes. But that's really about it. Again, I'm expecting a lighter trading day. A number of people turned it into a long weekend. But we had the numbers come out. We initially spiked up higher, but a quick little reversal off of that. We're all getting into cycle topping areas, so whether it rolls over today or sometime next week, I'm watching for a rollover on the daily and the weekly. But we have not had it yet. NVIDIA triggered the double and now pulling back a bit. Tesla's still marching higher, going into earnings. Insanity. In your groups, you have basic materials and utilities and energy all higher, real estate pulling back. Fed watch, let's just do a quick little refresh on this. So probabilities of this now about 71% for the September cut. So let's see about that. It's going to be interesting because if they do a September cut, it's going to be even if they don't mean it to be political, it's going to be framed as political, especially from the Republicans. And Trump, we'll see. We'll see how Trump reacts to that. But then we have the odds still of 2 cuts priced in the market this year. First one being September. Fear and greed, almost up to greed mode. Remember, the stock price strength and the breadth are continue to just be in the doldrums. So, by the way, Schiller PE finally back above 36. Back above 36. Yay. Remember, no earnings today. I just have next week's up because next week's Friday kicks off earnings season, Q2 earnings season. So keep that in mind for next Friday. All right. Good morning, Heinrich. Good morning, Jacob. So You can see here the little spike higher back to pretty much flat area from Wednesday. Wednesday's closing area. Again, we got divergence on the daily potentially. We're getting the cycle topping area on the daily, and the weekly's looking to roll over. And we still have the weekly divergence still in the wedge. So what would be critical for me is still breaking that wedge pattern and following through with a violation of the weekly rotation zone. Otherwise, the key support is still around 5,500. Keep that in mind for any pullback. In the short term, you see the little reversal here. Spike up, and then is good bad, is bad good. Market's still trying to figure that out. So, key thing into the open is about 55.85. We hold that run back up 56.05. So at least it's checked off the 5,600. Markets love to check off those nice round numbers. So let's check that off. If it really starts dipping below 55.85, the next major support area is around 55.65. But I'll be watching that 4-hour rotation zone today. On the NASDAQ also spiking through, what was the high? 20,496. So it couldn't get to 20,500 yet. The major support, not for today, but for heading next week, is 19,750 area. The very significant support area is right around 20,200 to 20,240. Going into the open, it's 20,360. So nothing's changed with the levels higher, by the way. If the NASDAQ were to break out, even going in early next week, 20,637. Good morning, Anissa. The Dow, I was just double checking something with NASDAQ. The Dow, not really much to talk about with the Dow just yet. Not much to talk about. If on a Dow rally, you're still looking to the very key resistance is right around this 40,000. Very key resistance is 40K. There's just not a good setup in the Dow, so it's not something I'm really looking at today. The Russell, same thing. A whole lot of nowhere. It's like a whole lot of rosy. 20,052. 20,052 is where it's trading, and this has gone nowhere. So, key resistance is still about 2064. Key support coming in about 2039, 2040. Other than that, it's in a range. VIX, not any fear to report in the market, but I'll start watching for this. If we start pulling back, if it can sustain a bounce higher. Otherwise, there's just no fear. The DAX, although the DAX breaking through that 62.5, already tapping off the 75. It looks like we'll definitely close above that 62.5. So should we be retested? Well, probabilities have shifted to retest the mid to late May high area. By the way, with that move, the potential double that never confirmed or triggered is off the table. So the critical area for me to continue to watch is about 17,900 still on a closing basis. Other than that, I'd put this into a broad consolidation market. Notes, little spike up quickly and then pulling back. I'm looking at the yield a little more with the quick little sell-off and the bounce back. So the yield is definitely weakened since Monday, but I'm seeing if it really finds a base in here, and then we start moving back up next week. We've had a little reprieve in the yield with the 10-2s. The yield curve spiking down. See it right here, spiking down and then a quick reversal. So we had a little couple-day pullback, but I'm going to be paying close attention to this if it starts really running back above -23 next week. That's for next week. So it tried to pull back, but it's already above where it closed on Friday. Dollar index pulling back. The key line in the sand is 104.24, still on a closing basis. We're getting the daily cycle bottoms again and oversold conditions. So I'm going to be keeping a close eye to see where this closes today in relation to about 104.50. Crude, we do have a little mini double. This is a little mini double. This is still part of the same side. It's a shorter term mini double, but this is a double I'm talking about. You can see it on the daily. So if we got a daily close, this is a really good trailing area for the short term run up in crude. On a daily close below 83.88, that triggers the pullback against the rotation zone. So I'd be looking at the first and second targets potentially only. You see here we've stalled out against the minor harmonic projection. Now that we can do that, we can raise it up because we have a pausing bar there. And that just reinforces still the magnet price, the 87.5. And then possibly retesting the high area from back in April. The only thing that shifts me in the short term is that close below Wednesday's low. We have gold chipping away. Wednesday coming up here, chipping away at the short term. I'm still watching this level. Talked about this 23.98. 23.98 on a closing basis. Otherwise, it's still in consolidation. It's just a wide consolidation pattern. We'll be watching for the probabilities to shift if we get a close above 23.98. Nothing to talk about otherwise there. Little pullback on the yield on the 10 years, still way above 1%, trading about 1.06. A little strengthening in the yen briefly, but into the rotation zone, but looking to rotate higher again. Out of overbought conditions, cycle's still rolling over, so this will be interesting to see if we get another rotation up next week. Other than that, the trend is still intact, and the potential very lopsided, huge weekly double pattern is still on the table, but barely. If it trades through 162.32, it's off the table. Euro, going to be interesting to see where the euro closes in relation to 108.25. If it closes above it, technically the probabilities have shifted for a little stronger euro. If it doesn't, it's still in that rotation rollover zone on a closing basis after getting the cycle tops and overbought. That's why I'm really paying attention to where this closes today. Bitcoin has now confirmed the weekly double. Remember, this needs a close below 56,500 on a weekly basis. So this is a big one today for me to watch. Okay? Because I need the weekly close because it's a weekly pattern. So it's confirmed but not officially triggered yet on the weekly. Now, if it did trigger, I would not be surprised to see a minor bounce in this. But we could see a bigger pullback in Bitcoin. So for all you Bitcoin people, again, you can see, excuse me, the prior major support area around 58,400 is now major resistance on any bounce. Spiders, Spiders, 551.59. The close is 551.46 from Wednesday. 554.09 is the next harmonic target. Other than that, the key support is coming in about 549.50. Below that, your major rotation zone support is about 548. The Qs, 490. Let's see where we're trading. 491.60. Your next minor harmonics, 492.72. The major harmonics are 498.50. Your pullback would be to the gap fill on Friday, and then the major support level is about 487. So that's where that sits. We have Tesla, which has gone on an absolute tear off of beating very revised down numbers, but closing above the 62.5 on Wednesday. So what's the magnet price area? 279. Should it continue? Remember, earnings on Tesla are not till July 23rd. So this could keep running higher based off technical probabilities. NVIDIA, we'll have to see with this, because NVIDIA triggered on Wednesday, thinner afternoon trading, but still triggered the double. Now, is that to all new time highs? No. But the targets there would be 133.16, 135.68, and then the 138 area. Now, if this triggers and then rolls over and we invalidate it, I'd watch out below. But could this make another little push higher in NVIDIA before it's over and setting up another triple divergence? Even if it goes to new highs, it could. There's your NVIDIA, Chris. There you go. So I know there's a very key line in the sand for a stop from a medium term. Hey, Richard. I got the Bitcoin. There's your weekly Bitcoin. Are you guys probably? That's something to ask the chat. I mean, what are you trying to do, Darkstream? Because before you were looking at, the penny stocks. And by the way, if you're looking to make trading easier, trade on a slightly longer term basis. Don't try to day trade. You can enter positions on a daily intraday basis, but try to manage them on a longer term basis. Just go smaller in size. So that's where we sit right now. There is not much else for me to talk about. S&P back to flat on the day. Just remember, on a bigger picture, really pay attention to this, because even with cycles at the top and overbought, keep an eye back on the 8 EMA area. All right, 55.60 to 55.65, because in the short term, that's your major support. And there's no point in hanging on to anything longer. Don't do anything silly. It's going to be thinner trading today. A lot of people aren't trading, or just they're sticking around for the market open after non-farm payrolls, and then they're done. And I'm going to be done. Because I'm going to enjoy the time. It's going to be 114 here today. So nice day to sit out, get a tan. But I'd rather enjoy the day, turn it into a longer weekend, and then come back fresh for next week. Remember, we have new earnings season going into next Friday. So lots going on next week. Lots of potentially interesting market setups on the longer term. Remember, we still have potential weekly divergences. We're still wedging higher going into the start of next quarter's earnings. So you can see this wedge pattern on a tear since the lows at the end of last October. But for the time being, trend is still up. You're in it for the long run. Well, and a lot of people with trading and investing, they tread water, they lose, and then they hopefully lose less, and then they break even, and then they get frustrated. But eventually, there's like one breakthrough they get, and then it's like people with I've even seen it with golf. People work on their golf game for years, and then there's just one little thing that puts them, that takes them like from that 20 handicap to below 10. Then one other little thing that takes them, maybe from 10 handicap to 5. So, but it's not an easy path. Anybody who says trading is easy is full of crap. And that is, I put it about 97 short-term traders. Long-term traders, no. So why I'm telling people, you're better to trade smaller, and swing trading is a lot easier than day trading, and investing, which is on even longer, gets easier because you follow the bigger trends. And if you're working on day trading, day trade in the direction of the macro trend. Why? Because the macro trend, a rising tide lifts all boats. When you're trying to trade against that, you're going to struggle. You trade with the current, then against the current. Too many people trade against the current, and that's why you don't need to trade every day. Okay? Like trading from the short side in this market, very, very difficult. So I've said before, doubles, I'd use as pullback patterns. You'll wait for the setups, you sit on your hands, and you wait for the key levels in this kind of market to get to support. But what if the market rolls over and starts diving? Well, you're going to get. It's not just going to be unless there's some major event, like some kind of terrorist attack, China invades Taiwan, whatever. You're generally not going to get the vertical down. And if you do, that's why you use stops. Other than that, we'll get a primary sell-off at some point that will trigger some patterns. We'll get the secondary bounce, and those secondary bounces might turn into a continuation pattern to new highs, or might stall out, and then we're getting a warning sign for a bigger rollover pattern. That's just in the macro. And that's where I'll leave it today. So everyone have a wonderful, safe, fun weekend, summer weekend, and I'll see everybody back on Monday. Bye for now.